bring on board Mr. Gaurang Shah, Senior Vice President at Geojit Financial Services. Gaurang, thank you for joining us here on News 9. I want to ask you about your assessment of the market, because a lot has happened since we spoke last. The market has rallied by about 500, 600 points. I'm talking about Nifty here. Then we have given up all that we made, but we saw a bounce back yesterday again. So what should be the strategy for the medium term? Should we buy these dips, or perhaps there is, some major correction in the offing?
Thank you, Suyash, for having me on the show, and morning to all of you all. So, I think the high on the Nifty was 22,200 or thereabouts. And then currently we are at 21,375. Similarly on the Sensex and similarly on the Bank Nifty or Nifty Bank. Stock specific, depending upon the numbers that the companies have delivered, you might see a little bit of more pain. Case in point, HDFC Bank, and likewise some other names. Whether you should, first, what you should do to answer your question, first question. I think selective buying in a phased out manner is a very disciplined approach in the stock market. And this is applicable to both, whether you are doing direct equity investing or whether you are doing your SIP mode via mutual fund. So continue that. I don't think if you were in love with the Indian markets at 22,000 plus, I don't think you have any reasons to complain at 21,300 or 21,400. Saying third point, 21,300 to 21,500 was a huge consolidation zone. Last year, I think it was second half, June, July, August or something like that.
Right.
We spent almost about more than a month time oscillating between 21,300 and 21,500. And eventually we broke that 21,500 and we've seen the all-time high that we've seen. So what I understand, what I understand is that to break 21,300 decisively and give a close below that, that looks a little bit, wishful thinking. And even intraday, you might break those levels, Suyash, no doubt about it. But closing is important.
Right.
40, 50 points plus minus from these levels, you can take it with a pinch of salt. My belief is that F&O expiry will keep the market choppy today. Tomorrow we are off, we get back to work next week, and of course we'll be discussing the budget as well, because that's going to be a budget week if I'm not mistaken. And the anticipation and what the finance minister has delivered and how do we dissect and understand the fine prints and the policies that are laid forward in front of us. I don't think you should stay away. I think selective buying, disciplined buying in a phased out manner has always been rewarding in the stock market.
All right, selective buying is always rewarding. So what will be the sectors that you will be adding in this correction if we see a major correction from here on also?
So I think there are 7 universes that we look at primarily, Suyash. Starting with banking and finance, both private as well as public sector banks, selective where we have coverage. IT has done decent in terms of numbers. Some mid-cap names have kind of disappointed, but I don't think those numbers are as bad as you can paint the entire mid-cap IT universe with a red brush. I think there is still optimism over there. Autos would be the third sector that I would look at. Defense-related plays are still something that is on the buy side as far as Geojit Financial Services is concerned. Some select stocks in the power generation, transmission, utilities, equipments, and of course select railway related stocks. Broadly, this is going to be the universe, and if I have to add 1 or 2 more names in sectorially, I think cement and metals is something that our eyes will be definitely focused on. And my understanding, Suyash, is that start with large cap and then level into some mid caps, small cap, micro cap. I think we will still give it a wait and watch. But yeah, company specific, sector specific, you can definitely look at the small cap business.
One of the sectors that you mentioned, the metal pack, we had Tata Steel that came out with its numbers yesterday. JSW Steel is also expected to come out with the numbers. I'll get to you in just a bit. But Amit, what are the key expectations from JSW Steel this time around?
Tata Steel swung back into black. JSW, the expectation is that quarter on quarter there will be a 45% decline in net profits. The calculation for year on year is not applicable because they were in losses the same quarter last year. The company is expected to post a net profit of 3,556 crores for the quarter gone by. The net sales are also projected to at 44,799 crores, down 1.8% quarter on quarter. So that is also going to go. Mostly their orders have gone down, and also the operating cost because of the increased price of coking coal has affected them. Their EBITDA per ton is likely to decrease 14% quarter on quarter to 11,000 rupees per ton for the quarter gone by. The coking coal impact is estimated to be around $30 per ton for JSW Steel's India operations. Moreover, the expectations for the top line growth, as mentioned, is expected to be relatively flat. When I look at the stock today also, JSW Steel, it is down marginally 0.38%. Gaurang, when we come to the steel stocks, whether it is Tata Steel, that is also just marginally up and down in the last 1 week, or even if we look at the last 1 month. Same is the story with JSW Steel. Now I'm looking at Jindal Steel also. That is also marginally up 0.5%. But if you look at the seen the last 1 week or so, it has been either up or down. No major gains. Same is the story with steel, which has gained a little bit more. But what do you make of steel stocks and JSW in particular?
So, first of all, Amit, let me highlight the coverage universe as far as Geojit Financial Services is concerned. In the entire ferrous, non-ferrous pack, positive on both the names that you spoke about, JSW Steel and Tata Steel, followed by Hindalco, Vedanta, and JSPL. The problem with the entire metal sector is not only locally but globally as well. And of course, the great news flow that comes out from China and the fluctuation in the commodity market. Given the domestic, backdrop, we remain optimistic because we are of an understanding that infrastructure building activity, which is kicked by the government at center and at state levels, by respect to state governments, is going to continue, and that is going to have a decent uptick in terms of demand for both cement as well as metals. Input cost over the last couple of quarters, if you go to see, has come down to a certain extent, barring 1 or 2 commodities, which is an integral part of that input cost. Pricing factor as far as flat and long products are concerned, we believe slowly, gradually we'll see an uptick as the demand picks up. But it is not that you will see a major turnaround immediately in the short to medium term for the metal pack. You need to have patience if you are selecting metals as a universe to invest in, and you need to have a very longish time frame compared to the other sectors like maybe banking or FMCG or autos. When it comes to metals, you need to have at least double the time horizon. For example, say for the other sectors, you have a time horizon of maybe about a year and a half. Then if you're investing in metal, you need at least 2.5 year plus kind of time horizon for a meaningful turnaround in terms of numbers and thereby reflecting upon the prices.
All right, and Gaurang, before we let you go, FMCG is one of the sectors that I want to talk about, and especially in regards to the interim budget. Do you expect government to do anything to resurrect that rural demand that has been missing in this interim budget?
So I think it's going to be a policy which has been delivered over the last many years. I don't think this government is going to do anything populistic. Wisdom has always prevailed upon this government, and of course, the Honorable Finance Minister Srimati Nirmala Sitharamanji, and I think they will do justice even this time. Inclusive growth for each and every community in India, each and every aspects of occupation in India, and of course overall as a country. So I think there will be something that will be done, but it will be overall. Focus will be as far as consumption push is concerned with respect to semi-urban and rural India, because that's where the large part of the population is.
All right, that's a view from Gaurang Shah. Sir, always great insights from you. Thank you for joining us here on News 9.